Tradespotting here. Be sure to hit like and subscribe. Today we're talking about AI wars. Microsoft versus Apple. There's a big battle coming. Which is better in your portfolio? I have a theory I'd like to present. We're going to talk about the intriguing world of these two particular stocks. Tech giants, Apple and Microsoft, both companies have their fair share of highs and lows in the stock market recently. Their approach to artificial intelligence presents a fascinating contrast. Microsoft, a stalwart in the software industry, making significant strides in AI despite the recent price fluctuations. We talked about the potential for Microsoft's service business to generate significantly more revenue over the coming years, and it seems like that'll be true. It has remained an attractive investment opportunity even with these stock declines because of the strong uptrend, and they represent opportunities so far. Their ambitious AI endeavors, such as the upcoming Microsoft 365 Copilot and generative AI functions in Bing, have driven potential and a lot of speculation with regards to artificial intelligence and search and how that's going to lead to an increase in the bottom line at Microsoft. Has the potential to generate significant revenue growth. Analysts have projected that AI-related revenue will increase to 100 billion by 2027, which will significantly impact Microsoft's growth rates. On the other hand, Apple, known for innovative hardware products, face challenges now maintaining growth due to the reliance on a product-heavy business model. Although they recently launched the iPhone 15, they are now struggling to get new products out on schedule at that same relentless regime, such as the Vision Pro, which is now delayed until 2024. Apple stock, while still obviously valuable, faces potentially what some would describe as higher valuation and slower growth projections compared to Microsoft. Investors then find themselves at a crossroads. Microsoft, 15% earnings growth target and a lower forward price to earnings ratio than Apple may appear to be better value. Its AI initiatives could potentially catapult further growth beyond 10% annually, making Microsoft a very exciting prospect when it reaches lows in the trend, especially now, as I say, with a little bit of a dip in prices. There's obviously the overall market to consider, so we're going to look at that too. But in conclusion to this point about Microsoft and Apple, with the stock wars now heating up, Microsoft showcases the dynamic industry of the dynamic nature of the tech industry right now. Apple, with their focus on hardware and the problems with regards to new entrants across key markets, it seems that there might be more growth at lower cost on the table for Microsoft. As investors, it's our duty to assess the potential impact of AI on these tech giants. We should be considering the best strategy for our portfolios, and some people will be looking to allocate towards Microsoft with a heavy rating there. We'll also look at the stock charts for both Microsoft and Apple. So thank you very much for joining me. That's the intro and the basic understanding of where it might be to align your thoughts, a starting place to align your thoughts for your own consideration with Apple and Microsoft. Most people will have considered having them in their portfolio at one stage or another. And of course, this is an update for the AI and quantum computing fund series that I do on the channel. If you'd like specific feedback on your portfolio, assessment and guidance, be sure to check out my Patreon. Now, into the charts. Thank you very much. And as I say, hit the like button. Here we have Microsoft, an awful lot of data on the screen at once, but bear with me. As you can see, this peak here Within it, it was divergent. The absolute high on this move was lower on the momentum, but higher on price action. So the divergence, which led to a retracement. It was natural that you'd see that because we exceeded this high over here, the prior all-time high on Microsoft. We'd exceeded it. It was also divergent, right? And so when you see that, we broke through resistance, we came back to test, find support. Where might it be? 236 retracement in line with the diagonal trend on the daily time frame. There you have this opportunity outlined for you. A strong retracement to that sort of area you would anticipate, right? Now, that's that. If we're to zoom in, go down to the 4-hour time frame, turn off the drawings, you know, there is a strong chance, I'd say it's outweighed by the potential opportunity if you manage your risk properly. The fact that we are so low, Microsoft is so low, MSFT at these areas in price means that it's an opportunity for some people, and you're able to manage that opportunity by managing your risk with a stop loss. If you like how to do that more, I've got videos on it, free videos, and a course that'll teach you all about risk management. That section of the course alone is fantastic value. That alone, it covers it will teach you more than the entire value of the course there in that one section. Anywho, the point I'm trying to make on Microsoft 4-hour time frame, having come down from the daily, is that this is a downtrend. You've most recently put in that divergent high, as we say, this guy, and then subsequently you've put in another high, which is this guy, and you can see that's lower, right? So subsequent to that, you're going to look see is you're going to put in a lower low, having put in a lower high. That would confirm a downtrend, right? Lower highs, lower lows, and you could then define that trend a number of ways. You'd be looking for other tests. Point I'd be making here is I'll delete these drawings so that I can make it more clearly. With a downtrend on the 4-hour time frame meeting support on a daily time frame, that gives you two ways to manage both your risk and the potential opportunity. So I think I've cleared off most of the important information here. Yes, and as I say, back at 236 on these tiny time frames, Rocky Outcrops toolkit indicator, you get that with joining Rocky Outcrops Patreon. Totally recommend you do that. It also updates here when you go down through the time frames to give you the most relevant Fibonacci, which itself is amazing value, right? That it does that, it does it properly. When there's many things that try to do similar, none of them do it as successfully. So you're looking at a retracement. If it moves back to the top side, you want to break 322. That would be significant because it would define this as a local low. That local low would be higher than the previous low. That's a higher low, which as part of an uptrend would represent an opportunity. You can manage that by saying if you do drop lower than 312, you don't want the trade. So some people would say, you know, you could look at this and ask for a little bit more chocolate on your biscuit, coming down and testing other important areas. There's a gap here in around 291, which closes at around 278, and a lot of people would look at that as a fantastic opportunity should Microsoft get there. And it would be true to say that if it does break this area that we've looked at, the previous low, whoops, there's a potential awful potential risk reward there. If you're looking at this previous low breaking on Microsoft, then this gap being filled is the next area to look to. That would fill in at around 280, and you can see that the low from price action at that time is around 274. So an entry, if Microsoft gets back down to around 270, would be fantastic potential. You can also manage your risk there quite easily because immediately you wouldn't want it should it drop below 269. You would be thinking, well, that's not the same trade that we conceptualized before, and you would stop out of it. So these are the two areas to look to immediately for a bounce. That bounce could ultimately go from testing in at around 310, 314, 316. Could go from here, test the prior high and a golden pocket retracement from the ultimate high, which would be in at around 344. So a long position that starts in at around the prior monthly low and the low from most recent decline on the daily time frame. You would be able to manage that here in at around 310, and you'd have a target of in at around 344. That's a very immediate trade, right? That's not necessarily the most chocolate on your biscuit, but it's a huge risk reward there, 10 to 1, and you could very much have an edge that would be successful in a 10 to 1, that if it is you're presented with the artifacts you are here. It's a strong opportunity represented by the potential for my edge and the ability to manage your risk. So that's why it's going to be part of the next tranche of investments in the AI quantum computing fund. And Microsoft here offer an opportunity at 313, 314 with managing risk at 310, 39. And then subsequently you're looking at around 270 for another bite of the same move, which could be the deep value retracement or could be the start of a huge breakdown. This is Microsoft, and to put it all in context on the weekly time frame, and all fits the data, this very strong moves, even with deep retracements, which it did from 343 down 200. Even with that, it still represented a fantastic opportunity for anybody who entered subsequent to 2021. You know, even that retracement, such a horrific percentage decline, still was leaving people in profit, and those people now looking at hundreds and hundreds of percent. Also, if you are watching along with the AI quantum computing fund, you'll notice that there's a number of trades we'd taken previously here. This was in the start of the year. We had Microsoft at these lows. Here, this is the launch of the AI quantum computing fund here at Tradespotting. We've got the start of these lows, huge moves up. We've got re-entries on May, most recent touch on Microsoft, and then subsequently you've got now another potential entry. 3 really good potentials, 2 have worked out fantastically, hundreds and hundreds of percent for people. If you add all these trades up, taking it from the start of the year, and if you were just holding it that whole time, you'd still be up 50%, right? Even with these large declines. So Microsoft doing very well, though I anticipate you took profit at the... Anyway, it's not financial advice, so play your own game. Right, so Microsoft. Now let's also take a look at Apple. Having outlined those 2 trades, there's a similar situation on the 4-hour time frame with looking at Apple. Here we go. We had this trade. You got 1, 2, 3 of the 4 take profit targets on this guy. Closed the gap. That was a good move. And subsequently price fell down again. Now we warned against shorting Apple at these levels, and obviously we had a long trade to take advantage of this reaction. Subsequently, we did talk about how even if it got to 4, the chances of a retracement would take it down to 174 again. And here we are, 174 Apple, still tucked there below a 236. Get this cleaned up here to 177. Needs to break that in order to move up. And it might be true that if Microsoft moves up, it would be unusual to see Apple go in the opposite direction, certainly immediately and at the same time. So while some people would tell you, you know, liquidate Apple holdings in order to buy Microsoft, I would suggest that that's not necessarily the right move unless you're looking to consolidate your tech investments. But it does seem to me that Microsoft has the potential to do more sooner on the stock market, partly because of sentiment and then the forward projection for earnings and how that relates back to the current share price and their price per earnings. So fundamentally looking at the growth prospects, the earnings per share overgrowth and the earnings per share relative to future projected profits, we can see that Microsoft have a potentially greater percentage move than Apple, yet it would be unlikely they'd go opposite direction. So it's then also true to say that if you think Microsoft is going to move further, then you could hedge a Microsoft long with a short on Apple. And that short might take the form of buying a put, and that put might be at a price higher than the current price. So while you're going short on Apple in order to protect a Microsoft investment should both of them go down, you can counterintuitively perhaps target areas higher than the current price on either of these stocks in order to manage that risk. And if you want to know more about that, definitely take a course, as I say. Right, so, and let me know if you think that the background animation is distracting from the charts, or it adds to the sense of immersion and keeps people engaged. I'd like to know your thoughts. Of course, you guys are to some extent in control of how I handle these parts of the show. So do let me know in the comments below, and be sure to have liked and subscribed already. So Apple, it definitely has potential to break above 177, 179, and you're doing very well. Target in 180. If you can manage to make it above 180, you have a tiny gap that closes at 181, and if that happens without a lower low, then I would expect to see Apple testing in at around 184, 185. So it could easily move up. These lows here, you can tell, are higher on the momentum. So if you touch of bullish divergence, you can see that on the 4-hour, whereas on the daily time frame, you've got strong bearish divergence on the most recent peak. It also took you out of the bullish control zone. You've come back up and found a rejection at it. So that would be like a failure swing. And at this point, you would anticipate coming right back down and testing the previous level of support. And that failure swing, that name with the word swing, obviously swing traders then try to take advantage of that type of artifact, presenting these type of moves, especially on big stocks that are heavily traded, such as Apple. So quite, signposted that move back down quite clearly there. And that's how you would trade that if you see something similar happening in future, especially the divergent peak and after an all-time high. And if things are in a really strong uptrend, like for example Apple, this is the second strongest uptrend in the history of the stock, as is in terms of percentage move over the short period of time. Only once has it gone up a higher percentage in a similar amount of time. And so we captured that move. We captured this retracement itself, a tiny little bit of a spike, but very, very valuable. You're looking for this thing now to break 177, break 181, head to 184. At that point, they're likely a touch of resistance. If it can keep going from there, you've got 190, and then we would expect it to exceed $200. This would obviously rely on good news coming out about the iPhone 15 sales, and potentially this week we see some impetus for the stock moving with the Huawei sales event, and there may be some positive news which rubs off on Apple. Interesting dynamic we're seeing there now. So Apple, where would we look to see this thing break down? If it doesn't hold 174, which is where it's at here, closed on Friday, it looks like it'll open around those areas today, then you wanted to hold 171, 172. A small bounce to that area is very likely, but if on the 4-hour time frame it opens and closes candles below 171, it's very likely it comes down, testing around 164. And if the overall market is going down, which it might very likely could be should Apple be going down because it constitutes such a large part of the overall market, then it may well be that Apple doesn't stop to 165, 164, 150, maybe even in at around 145. And the prior hike from the formation that you'd be paying most attention to is that which was confluent with other levels of resistance and support in previous price action. You'd be looking there in at around 155, 50% retracement on this trend, and having put in a break of the all-time high, having come back, filled a previous gap so you don't leave artifacts behind you'd need to close, and put in a failure swing at the same time as having put in the potential then for continued breakdown on the momentum. You could see that Apple would give you a heads up on the overall stock market potentially falling down if it shouldn't hold 171 to 169, testing in at around a 50% retracement of that previous move. That being such a strong move would be perfectly natural in an uptrend, and as such, that's what you'd be looking at, because this low, anything that comes in around those areas I'm talking about, that would be here, they would be obviously much higher than the previous low. And most recently you put in this high on the macro level, which is clearly higher than the previous high. So if you are looking for a strong uptrend, a lot of people would check out of these long-term trades because they're emotional decisions, which would be natural when you watch stocks move 50% of their previous rise. A lot of people find that hard to stomach. Of course, if you haven't taken profit at the top, it's hard. If you have, then it's a great re-entry. And those sort of levels on Apple would represent a fantastic opportunity to start targeting up at around 250 again. Long-term portfolios will be looking at that sort of opportunity. That's not to say that either Microsoft or Apple would represent a better investment than the other with regards exclusively to AI, because the full return on those investments and that capital expenditure will take a while to bear fruit on the revenue in terms of bottom line. But Microsoft are making great strides with Copilot 365. The current price of Microsoft per employee at a large business comes out to around, on average, $375 per employee per year. If we add on Microsoft Copilot 365 and the AI component to help people do more productive jobs, so it's going to be a very attractive investment for businesses, then that $375 goes something to around the region of $490, which is a massive increase. And it may well even be a lot greater. That's very, very reserved estimates. Some people think that it could go around $700, $800 per employee, which would talk about doubling the revenue of Microsoft's service business. And that's in an environment where you would expect an increasing adoption of these products. So we're only talking about targeting their current customers. There's no customer acquisition cost. It's an upgrade cost, which itself will be funded by increased productivity. So a fantastic opportunity for businesses, and one I think isn't currently priced into Microsoft's share price, because the earnings per share are currently at around 25x, and the future earnings per share, profit per future shares, looks as though it's going to have greater potential over the short term than Apple. And so it's undervalued in a comparative aspect, which might lead to big bounces in Microsoft. Now, that's only going to happen if SPY itself moves to the top side. Quick look then at SPY. You can see down at 429 pre-market, a little bit more off from the close there on Friday. 430 was our target. As you can see, a little bit of a broadening formation here, volatility increasing. We talked about this triangle. Probably see it there. This triangle, it's in this zigzag that's about to get deleted. That area of price action represents consolidation with lower highs and higher lows. It comes subsequent to this sideways price action, which was on the back of this uptrend. So price action uptrend, hits a resistance level, comes back down. That test, just to point out the point that what I was making on about the 50% retracement on Microsoft and Apple and where you might be looking to, that retracement there, 50% from the low to the high in the most relevant uptrend as regard to this retracement, shows a 50% move back. So you can see that, well, I mean, to delete it, but you can see that 432, that not holding, we might then look to a golden pocket and at around 425, which we can also say that red line, Tradespotting's gone important lines. The bottom side of this broadening information where we see fat SPY at the minute on the 1 hour, on the 4 hour time frame. Hello, time frame. Well, as the 4 hour time frame gets its act together, I'd like to point out that this most recent broadening formation is at the end of a series of divergent peaks which have come in to test the significant level on any retracement in around that 50%. And you can see that below, well, the charts aren't loading, that there's a number of gaps to aim for. And if it is that SPY is breaking down, you see it go down at 425, and at around 414, and then around 395, then you're clearly going to see big dips on Apple, with it being such a large constituent of SPY. And you're going to then not very likely to see Microsoft move in the opposite direction. So, especially when you consider that many people's narratives over the recent rise in stocks until the September decline was AI driven, and Microsoft clearly leading in enterprise revenue creation in terms of AI, generative AI. So that's the take on both of those two stocks. It's Monday, so a great start to the week with an important look at two really important players, and obviously an early morning catch up with yourselves if you caught this show near the start. If you're new, thanks so very much for watching. If you've seen me before and you're coming back, I appreciate you. Thanks. If you like to tell your friends about Tradespotting, I'm here every day and I'm committed to the long term to helping you and anybody you bring along to the show. If you'd like to get better at trading, you can always take my course. The link's in the description. You can join the free side of Rocky Outcrop's Discord, which is the only place I spend time talking to people about stocks. Rocky Outcrop's Discord, that on YouTube. It's at www.discord.gg/rockyoutcrop. And I've obviously got channel memberships and Patreon. If you'd like to support me in this job, it's appreciated. The link's in the description. I very much appreciate you. Thank you very much for stopping by. See you in the next one.